about stocks this week. Volatile trade on the last street as the markets end on a high. The Nifty crosses 7650. The IT sector is in focus. TCS's Q1 earnings boost expectations from the rest of the sector. And our investment advisor Gaurang's has made a profit of 44% in his portfolio, outperforming the Nifty by nearly 15%. We'll tell you how he did it. Welcome to All About Stocks. You're watching ET Now. I'm Faye D'Souza. This is a show for retail investors who like to put their money in the stock market. Now, we heard the budget announcement. It's come and gone. A new earnings season has begun, of course, with TCS announcing better than expected results. We're going to find out over the next half hour what to expect from the earnings season, what your strategy should be going into this earnings season, and where you'll find the value in this market. We'll also answer some of the questions you sent in during the week on the email ID that's at the bottom of your screen right now. First, let me bring in Ajay, who'll give us an update on how the markets played out this week. Ajay, take us through what happened.
Well, Faye, it was a profitable week for Indian equities, but let me tell you, it was fraught with a lot of volatility and did test the patience of a lot of traders and investors. The uptrend continues into the market, but volatility was the key theme. On the one side, we almost went to 7,400, but then came back or rebound very sharply. The highlight this week is the way metal counters and even the banking stocks have rebound very sharply. Both these respective indices gaining about 6.5 to 7% this week. Also, that though there were small moves coming in from large cap stocks, it was the broader market which continues to remain extremely vibrant. We saw around 4.5–5% moves coming in on the small cap and the mid cap indices this week, massively outperforming the large cap stocks. But also at the same time, global cues and even geopolitical uncertainty to a certain level remained a big concern for the market and did put a lot of pressure on select days, especially coming out of Ukraine after the aircraft was shot down over there. But the good thing is that the flows to the market continue from the FI and DIS side. Even the first quarter earnings season, though it's in a very nascent first week itself, up till now has been good and robust earnings like the one coming from Kotak, TCS, INFOSYS, even IndusInd Bank. Bajaj was the only weak link as far as earnings were concerned this particular week, but net supporting the market or not souring the sentiment so far. Next week is also going to be a big one for earnings, where companies like HDFC Limited, even the two cement majors including Ambuja and Ultratech, apart from that Kane and Wipro would also come out with results, Axis Bank. So it will be a big week, and traders believe that going forward in the near term, it will be the earnings momentum or direction which will overall set the tone for the market going forward.
All right, Ajay, thank you so much for joining us with that update. Now joining me on the show is Gaurang's, Vice President at Geojit BNP Paribas. Gaurang, it's always a pleasure to have you on the show. Thank you so much for joining in. When we look, at the TCS numbers so far, and it does seem like the IT sector is in focus largely this week, also with that big exit from INFOSYS. Tell us what you're reading from the TCS numbers in particular. What does this mean for the stock? Do you think this is a stock we should hold on to in our portfolios for some time to come?
Well, thank you, Faye, and it's always a pleasure to be on your show. Well, so far, I guess whatever we have seen in terms of numbers for the first quarter this fiscal on the IT sector has been much better than what the expectation was, especially on TCS numbers that we saw. On all parameters, if you actually go to see, the company has delivered much better than expectation. Dollar revenues, rupee terms, top line, be it in terms of margins going forward from here on. And of course, given the fact that you had, wage hike and which could have impacted the margins to a certain extent, but they have maintained to the run rate, and that goes to prove that in the quarters to come and years to come, there are only good times that lie ahead of TCS. As a disclosure, we had a positive coverage with the price target about 2550 to 2600 earlier before the numbers came out for the first quarter. We would possibly revise it upwards close to about 2750 to 2800. So if somebody has it in the portfolio, it is definitely a hold, and if somebody does not have it and is looking to buy, we would definitely recommend a buy from a longer term time horizon.
Recommend a buy at these levels, Gaurang, on TCS right now?
Fair, given the kind of performance and in an environment when the market was expecting a little bit of squeeze on the first quarter numbers, the company has maintained the run rate. So if you have patience with the stock, you can buy it at current levels. Somebody with a lower risk appetite can take a small exposure and go on increasing that as and when the markets correct. But I don't expect a significant correction on the market, and in case if that correction comes through, I think a lot of funds will move into IT and pharma given the safe haven bets that they are.
Tell me very quickly what your call is on INFOSYS as well right now. There are a lot of us who have INFOSYS in our portfolios. Does it make sense to hold on to it? What do you expect from it over the next couple of years at least?
A major change is going to happen from 1st August onwards. Mr. Vishal Sikka will take over the management, and he is likely to bring in a lot of dynamics going forward from here on, and possibly a new direction which was creating a concern for the small and big investors and for the clients as well of INFOSYS. Now, keeping in mind the experience, the track record that Mr. Vishal Sikka has, and of course the commentary from the top management when the appointment was declared some weeks back, I believe that there could be a sizable amount of positivities that will emerge. It will only be a question of wait and watch as to what changes does Mr. Sikka bring into the INFOSYS, and of course how does that impact the growth of the company going forward from here on. But on all aspects, like I said, for TCS, we also have a positive coverage for INFOSYS with a price target standing at somewhere close to about 3,850. So you want to buy TCS at current levels, you can do that. There is a little bit of uncertainty since there is going to be a change in top level management, but I don't think that's going to be a long-term overhang on the stock of INFOSYS.
All right, Gaurang, we haven't spoken up till now after the budget, so I'd like to ask you a few questions about what we heard. And it was very clear from that entire speech that this government, if it was giving us direction, is going to be focusing very strongly on manufacturing. And a couple of my colleagues in the office walked up to me and said, it's the cyclicals that the market is focusing on right now. It's infrastructure, it's real estate. It's not the services sector, it's not IT, it's not pharma, it's not FMCG. Do you think that as retail investors, as long-term investors, we need to be refocusing our portfolios as well?
I don't think you need to do anything of that sort, because if you are going to boost manufacturing activity, then that is back-end support of services side as well. So I don't really think that you need to, jump the gun and, hop on from one sector to another, from services to manufacturing side. Under all possibilities, I have always advised to have a balanced portfolio. So if you are going to expose your investment on one aspect of the market, then that might not give you great returns as you would have desired. So I would say you need to balance your portfolio both on the manufacturing side and the services side.
Well, R.S. Kumar has sent us his entire portfolio. He wants to know which of these stocks he should be holding on to. Right on top, he has 500 shares of PTC India Financial Services. Now, Gaurang, PTC India Financial Services is indirectly linked to the power sector. Given how serious this government is right now about reviving the power sector, what do you think the prospects are for this stock going forward?
Well, again, there were dark days, but given the kind of focus that the new government has in improving the infrastructure for power generation, for power transmission and power ancillary, I think there's going to be a huge positive for this particular company where the gentleman has got invested. But you need, again, power generation is also a long gestation period. I would advise a hold over here with a target of about 45 rupees. Time horizon could be stretched to about 14 to 16 months.
The next stock on his list is Bank of Baroda. He has 75 shares, which he bought at 884. The stock ended the week at 836. What's your call on Bank of Baroda, Gaurang?
Well, one of the PSU banks wherein we are positive on fair, and we look at the numbers last 2 or 3 quarters, I think there's been a significant amount of improvement of quarter on quarter. We expect this better performance to even get better going forward from here on for Bank of Baroda. 1 or 2 quarters you may see strains on NPAs and restructuring side of the balance sheet for Bank of Baroda, but that should not deter long-term investors. We would advise a hold with a target of about 965 on Bank of Baroda. And just to put in a little bit more positivities, we expect interest rates to cool off in the next 2 or 3 quarters. That should augur well for the entire banking pack as well as interest sensitive and equity market.
Well, he has 60 shares of Aditya Birla Nuvo, which he bought at 1170. That stock ended the week at 1428. Now, the interesting thing about Aditya Birla Nuvo, Gaurang, is that it's a holding company for financial services. Financial services owns the life insurance business. There is now the availability of higher capital from the foreign partner in that life insurance business. All of these changes that we're seeing in financial services, how do you think it's going to affect the Nuvo stock?
Well, a great company to be with and good pedigree, fair. So we would definitely recommend a hold over here. Our conservative price target on AB Nuvo would be somewhere close to about 1,550 with a 1-year time horizon.
He also has 40 shares of Sun Pharma, which he bought at 600 rupees. What would you like him to do with this stock?
Well, my recommendation was there, if I'm not mistaken, in our earlier interaction on Sun Pharma when it was trading close to about 600 or sub 600 levels. First target more or less achieved at 750. Given the positivities in terms of Taro revenues getting reworked upwards in dollar terms, given the recent acquisition that the company did, and of course the big merger with Ranbaxy, if that materializes by calendar year end December 2014, then this stock can definitely go places. So definitely hold. As of now, you can work with a target of about 785, but no, you should not be in a hurry to sell it off. Wait for this entire process of merger with Ranbaxy to go through, and the merged entity will throw up a lot of positivities.
All right, it's time for us to take a very quick break, but stay with us. When we come back, we'll talk about Gaurang's past recommendations and we'll see how he's done so far. Don't go anywhere. Welcome back. You're watching All About Stocks on ET now. Thank you for staying with us. Gaurang Shah is still with us, helping us pick stocks for the long term. Now, some time ago, Gaurang recommended Tata Motors in March earlier this year when it was trading at 381. He gave us a target of 475 for a year. Well, that stock has crossed the target. Gaurang, thank you for the strong recommendation. Now, for those of our viewers who took your advice and bought the stock, what should they do now? Do you want to give us a fresh target?
I think JLR business has already been good for Tata Motors. The problem was the India operation in form of brand Tata Motors, wherein again very recently there have been announcement that they are going to launch at least a couple of models to revive the India operation and India business in terms of brand Tata Motors and to recoup or recover the lost market share. Now, if I throw in all these possibilities of domestic business doing well and the contribution which has been quite significant from JLR, I think I would definitely recommend a hold over here. In the next 2 or 3 months, I think we should be able to gauge the success of the new launches that brand Tata Motors will do in the domestic operations, and that I believe will scale the stock to newer highs. You can hold on to the stock with a conservative price target about 525 to 530. This with a caveat that you need to look at the success of the new launches that brand Tata Motors will make in the domestic market.
All right, so that's Tata Motors for you. That's Gaurang's recommendation that he gave us in March that still holds strong. And a lot of us have made money off that recommendation. So thank you, Gaurang. Let's look at Gaurang's recommendation for this week. And he brings us Tech Mahindra. It ended the week at 2,121 rupees. So close to the 52-week high, Gaurang. It's doubled nearly if we look at it over the last year. Look at that stock go. Now, tell me this. You have INFOSYS and Mindtree in your model portfolio on this show. We talked about TCS earlier on the show. Now we're talking about Tech Mahindra. I want you to pick for us right now the best value that you see in that market, in the industry. Do you believe that best value is in Tech Mahindra at this point?
Well, you just see the performance of Tech Mahindra, and you rightly pointed out the stock has doubled over the last, I think, about 8 months to 12 months time horizon, or maybe a little bit more than that. Now, post the merger of Mahindra Satyam with Tech Mahindra, the merged entity has emerged much stronger than ever it was. Given the kind of performance that your frontline boys have already given up in terms of TCS throwing up better numbers, INFOSYS better than expected, names like Mindtree doing much better, I don't have a single iota of doubt in my mind that Tech Mahindra would fail any of those. So I would say that it is one of the stocks that could possibly re-rate itself going forward from here on. And at 2150 or closer to 2200, where it is trading right now close to the 52-week high, I think the stock is about to move into the blue sky zone territory. So, and of course, with that, numbers possibly in another week or a fortnight, the numbers are going to bow out for Tech Mahindra for the first quarter this fiscal. I guess that will only open up much more possibilities of how an investor can, raise the capital that he or she would have invested by buying Tech Mahindra. So, throwing all these possibilities and keeping in mind the growth prospect going forward from here on, I would say that yes, despite the fact that it is virtually close to the new 52-week high, I would say it commands a buy over here.
Well, Gaurang, before I ask you for your target, I have a very quick question for you. Now, there's another view that's going around. For those of us who are looking at our portfolios and the bigger stocks that you mentioned, we're talking about stocks like TCS, INFOSYS, ITC perhaps. These stocks have given us really handsome returns over the last couple of months. Now, do you believe there's any merit in the theory that we shave some of the profits off and move them into mid-cap stocks that might perform better over the next few months? Does that make sense? Or should we keep our allocations the way they are?
Well, if I have always advised to book profits depending upon what your targets are and what your time horizon is. And the first priority should be given to the targets that you have set aside in your mind, irrespective of what time frame you've given. So if you have achieved those targets that you've set aside in your mind, I would say that take some money off, and you could possibly churn in IT from Tech from maybe TCS or an INFOSYS or other names like HCL Tech, to names like Mindtree or Persistent System, CMC Limited, or as a matter of fact Tech Mahindra, which we are talking about. There is all possibility that these stocks could re-rate themselves, like I said, on fallback of good earnings and growth visibility. So yes, if the targets was what you have set aside in your mind, you have achieved it. It is time to take some money off and make some investments in mid-cap IT companies like Tech Mahindra or Persistent System or Mindtree.
All right, so that recommendation is Tech Mahindra at 2121. Gaurang, give us your target on this stock.
Well, conservative one-year target is 2450, but I will not be surprised if this stock surpasses this target of 2450 within a year time, and we could again talk fair and re-rate like we are talking about Tata Motors just a while back. I think there are all possibilities that we would revise our target upwards.
All right, let's take a few more questions. The Sumi has written in. Now, he wants to know if you should buy TVS Motors at the current levels for the long term. Just so you know, on your screen right now, TVS Motors ended the week at 170. Now, Gaurang, we know that over the last month or 2 months, TVS Motors' market share has grown. It does seem to have more buzz in terms of launches right now. But if you compare it to other competitors within the two-wheeler space, is this the best bet right now?
Well, I would say it is, despite the fact that in the last 6 to 8 months, this stock was trading at somewhere close to about 40 or 50 odd rupees fair. And today we are talking about 170 with great market share under its belt. New launches in terms of automated scooter, in terms of motorcycles, and a tie-up with BMW, if I'm not mistaken, should augur well for them, wherein they are planning to launch 300 to 350 motorcycles up to 500cc. And this should only open up more opportunity for TVS Motors. This process may take maybe about 6 months to 12 months for the tie-up with BMW and the rollout thereafter. But given the optimism that the management has spoken about, both in terms of their domestic business as well as the tie-up with BMW, it only augurs well for the growth going forward from here on. So if you ask me, compared to a Bajaj Auto or a Hero MotoCorp, of course, this is one of the company which is relatively smaller, but in terms of getting your return on investment, I think it is one of the best suited candidates in the two-wheeler space. So I would say buy TVS Motors with a one-year target of about 220. This is again a very conservative target. Okay? We will possibly relook at it once the tie-up with BMW and the launches of those motorcycles happen in the Indian market.
All right, I want to take another question. Narendra has written in. Now, he bought 600 shares of L&T at 1,700 rupees recently. He wants to know if he should remain invested for the next 3 years. L&T ended the week at 1,686. And this stock has been at the forefront of every little twitch the market has made in the direction of infrastructure. Gaurang, for someone who's holding this stock, now, albeit 1,700 was a high level to get in, but what do you think he can expect from the stock over the next 3 years?
For a stock like L&T, there is no high level that you get into, because it is a stock that has always created value for a large investor or small investor. Apart from that, it is one of the most investor-friendly companies in terms of giving out bonus or declaring dividend. Given the optimism in the cap goods engineering space and infra space, and of course the revival that the new government is trying to put into, being a market leader in the cap goods engineering space and of course infra space, I have no doubt that with the view of 3 years, our conservative side, you should at least get 20% return per annum. So whether you got in at 1,600, 1,700 or 1,800, with L&T you don't have to worry.
All right, it's time for us to take a very quick break. When we come back, we'll review Gaurang's own portfolio. We'll tell you how he's made a profit of over 40%. Don't go anywhere. Welcome back. You're watching All About Stocks on ET Now. I'm Faye D'Souza. Thank you for staying with us. Gaurang Shah is with us as well, helping us pick stocks out for the long term. Now, Gaurang designed a portfolio on this show on the 14th of December 2012. That portfolio is currently at an overall gain of 44%, beating the Nifty by close to 15%. Gaurang, thank you for that really strong portfolio. What I'm going to do is I'm going to call out the names of the stocks in this portfolio, so you can take them down if you'd like to. There's IndusInd Bank, Sun Pharma, Godrej Consumer Products, Havells, that's up 74% since we bought it, M&M, Vocard, Mindtree, up 150%, Apollo Hospitals, Eicher Motors, and INFOSYS. Gaurang, it's a really strong portfolio. INFOSYS, they're down a little bit. That should, I'm not sure if that should cause us any sort of concern. Do you want to make any changes at this point, or do you think that, like the advice you gave us earlier, we should just hold on to our portfolios as is?
I think good names, you should definitely hold on to it. And from December 2012, a lot has changed for most of these companies in terms of growth prospects. Though I would have liked to see a better performance from names like Vocard and maybe IndusInd Bank, but I'm not in a hurry to make any changes. I would continue to hold on to all those names that I have bought, and I would expect a decent growth going forward from here on in terms of YOY earning or Q1Q earning. And like I mentioned earlier, Fair, good names are meant to be there in the portfolio, and they always create value for your portfolio.
All right, unfortunately, we've completely run out of time on this show. But what I'm going to do is I'm going to give you a recap of Gaurang's portfolio before we say goodbye to him. There's IndusInd Bank, Sun Pharma, Godrej Consumer Products, Havells, M&M, Vocard, Mindtree, Apollo Hospitals, Eicher Motors, and INFOSYS. Remember, he recommended Tech Mahindra earlier on the show. Gaurang, thank you so much for coming in. Of course, we're going to keep asking you to come back and give us advice as far as investing in stocks are concerned. Send your queries in, whether you have a question for Gaurang or for anybody else, to our email ID. It's at the bottom of your screen. You can reach me personally on Twitter. Keep investing. Thanks for watching.